Americans still have not filed their taxes, even with the deadline being about 2 weeks away. But local financial professionals have some tips to make it painless. This morning, I'm stretching your dollar with timely tips for last-minute filers. 10 days and counting for the tax filing deadline. If you haven't done so, be like a squirrel and gather what you need, which is often more than just your W-2s.
If you have any other sources of income, you want to gather your 1099s for those. You also want to make sure that you have your 1095 forms to prove that you had health insurance coverage. That's very important.
And that's something new to most Americans, says Casey Marx with Crown Haven Wealth Advisors. This one is not new, but there is a way to decrease your tax bill by increasing your retirement savings. The money you contribute to a 401k or IRA is not included in your taxable income. So if you're under 50, you can put up to $5,500 into a qualified retirement account.
If you're over the age of 50, you have the ability to add up to $6,500 into an IRA. And this is a scenario in which you're lowering your tax bill and you're saving for yourself. So that's a no-brainer.
Filing free is also a no-brainer. You can do so on the Free File IRS website or other sites as well if your return qualifies. 2 more tips. First, file electronically. It is fast and easy, and oftentimes, like on the IRS website, it is free. The second one, use direct deposit. It is safer because the check is not sitting in your mailbox. If you're not able to make the April 15th tax filing deadline, you can file for an extension.
Just be mindful, though, that if you do take that extension and you end up owing taxes, you might have to pay a penalty for what you owed.
And despite the last-minute nature, be careful and be correct. The most common error is putting down the wrong Social Security number.
When it comes to errors, if you make these errors on your returns, it can flag you for an audit, and nobody wants an audit.
Those errors can be as simple as a wrong address to rolling over an IRA. Where did the money come from in that IRA, and where's it going? Get those basics right, or you could be on the wrong side of the IRS. All right, here are some tips if you are planning ahead for next year. Make sure you're withholding the right amount from your paycheck. A lot of people withhold too much and get a big refund each year, but that's your money the government is holding, interest-free year-round. If you withhold too little, you will owe a tax time. Now, ideally, you will want to have just enough withheld so the amount will come as close as possible to your actual tax liability for the year. By the way, you can make changes at any time by filling out a W-4 with your employer. If you'd like more information on this story or any other money saver, go to fox59.com/stretching-your-dollar.
Okay, I'm stunned about the Social Security number.
Yep, the most common mistake.
Wow.
And also the routing number. If you give them the wrong routing number, if you do direct deposit, the IRS, he says, Mr. Casey was saying, Mr. Marks, excuse me, saying they don't really have a way to fix that, the IRS.
So it's just, that's where the money went.
You've given it to somebody else.
Quadruple check that.
Yeah, that's not good. All right, your time right now is 5:45.